Breaking news from the U.S. Federal Reserve. Chair Jerome Powell has signaled potential changes to the Fed's dot plot interest rate forecasts as part of a policy framework review expected to finish by late summer. The dot plot shows what each of the Fed's 19 policymakers expect for economic growth, unemployment, inflation, and interest rates over the coming years. These projections appear quarterly in the Fed's summary of economic projections. While supporters say the dot plot makes monetary policy more effective by providing guidance, history shows these forecasts often miss the mark. At the end of 2021, policymakers projected rates below 1% by end 2022, but the Fed actually raised rates to 4.25 to 4.5% to combat unexpected inflation. At a New York research conference, Powell mentioned the Fed will take a close look at the SEP and compare ourselves to what other central banks around the world do. This review could lead to significant changes in how the Fed communicates its rate expectations to markets and the public. Former Fed Vice Chair Don Cohn suggested showing the economic assumptions behind each policymaker's projections. Other central banks take different approaches. The ECB issues staff forecasts on inflation, while the Reserve Bank of New Zealand publishes inflation forecasts with consistent policy rate paths. These potential changes could give Singaporean investors clearer insights into future U.S. monetary policy, which directly impacts global markets and Singapore's economy through currency effects, trade relationships, and investment flows. Stay tuned to the Investing Iguana for more updates on how these Fed communication changes might affect your investment strategy in Singapore.